Hungary. Tell us a bit.
Thank you. Well, the VC industry practically started in Hungary in 2009. There were some smaller funds available practically in Budapest, but 2009 marks the first Jeremy funds, the time when the first Jeremy funds opened. By now, there are 4 rounds of Jeremy funds, altogether in excess of 300 million euros. So there is plenty of capital available for startups. The funny thing is that I heard a lot of times that Hungarians are contrarians, and in this sense, I think that we are. VCs came first, and then came the entrepreneurs. So by now, we have enough entrepreneurs in the system. I'm sure that you guys all heard of Prezi, Prezi, which is a presentation tool. The company started in 2009, practically going against the largest presentation tool in the world, PowerPoint. And yet, Prezi became a $200 million company, actually never used a penny of its investment, and it used basically just cash flow of the company that was available from its customers. I like to say this story, tell the story of Prezi because it's a very good and typical story of Hungarian shrewdness and sort of resourcefulness, because that's what Prezi did, and they are sort of the flagship of startups in Budapest. Overall, I also like to highlight Prezi as an example because they view the world as their market, not Hungary, because Hungary is just a small country, not very rich in resources and not very rich in disposable income. But the world, the English-speaking part of the world, is basically their ready market. By now, we have about 3,000 people that we can call startuppers or entrepreneurs who are working on various companies. And just sort of an indication how fast things changed in Hungary. In 2012, Startup Nation, the book on Israel, was translated into Hungarian, and the translator didn't dare use the word startup in the title because nobody would have understood. That was in 2012. So he said, a nation ready for start. That's how they translated the sentence. By today, every second article in the newspaper is about startups. So it's a huge change. Some people say it's a new fashion statement to run a startup. Obviously, we are on the other edge of the extreme. But the good thing is that there are a lot of young entrepreneurs and a lot of young people who are actually choosing this path, and they want to actually start to create something. Talking about innovation, I think that Hungary is very, very strong on technical issues, especially mathematics. Innovation is a good thing, and it has obviously its share in the new startups. But we are very heavy on deep technologies. A lot of algorithm-based companies, big data, and IT security companies that are popping up left and right, and that's where our focus is, and creating viable companies out of those deep technologies that some young entrepreneurs or some young technical people are creating in the universities. What we've done with iCatapult, we actually tried to open the door to the world. So we took some of the startups to the US, to New York, and to the Valley, and we brought in some European expertise in how to build global startups, which are actually operating at the speed of an international and American startup. And there are some very good signs. The very young generation speaks English at a reasonably good level that they can actually do business in. What we see is that just today, actually, we just closed the application for an event in New York, which will be hosted by Google. And the application was for a free plane ticket and 3 nights of free stay. And there were 15 companies who applied who actually claimed that they have revenue from the US, significant amount of revenue. So that's a new thing in Hungary, that we see these people who are doing business overseas and who haven't done it through some government grant, but they actually created it straight out of the market. Talking about the public funding, besides the Jeremy funds that we have plenty of, we have 28 Jeremy funds in Budapest. Just very recently we have...
You might want to mention what these are, because not everybody knows.
The Jeremy funds that were mentioned before. Jeremy funds is a special EU construct in which 30% private money is matched with 70% EU money. It's a 10-year term fund typically, and they are earmarked to be invested in small and medium enterprises at very favorable rates and favorable conditions.
So that would be equity, 70% of the equity coming from...
70% of the equity coming from the EU, but the fund holds the equity in the companies.
And what happens on an exit? Do they have the same rights as other investors, or
Well,
does the private money get sort of an advance ticket?
Well, now you have a Hungarian answer. There are not too many exits yet, so we don't really know the answer. But fundamentally, the EU is a silent partner. They don't ever veto. They don't ever have even voting rights in the scheme. They basically provide cheap, available funding. The problem is not how they're going to act in an exit situation. The problem is that there are not enough good companies to invest this money in. So that's why we are very much focusing on education and basically bringing up the next generation of entrepreneurs. And that's the public fund that I wanted to mention is about. It's a $10 million fund, so it's tiny investment. It's a new construct based on the Israeli Yozma model. It's a mutation of that. When 4 accelerators have available funds to train, prepare, and invest. Train and prepare entrepreneurs and invest money into them to actually bring their company to basically to break even and to even to push them on to the global markets. It's very important for us, just like for Israel. It's very important that we actually initiate and we are pushing these entrepreneurs very much to build companies and build products for the global market, because that's where the real market is. Hungary is very small, and not a whole lot of people want to learn Hungarian. So we have to focus on the English-speaking markets.
So it sounds like you're developing the deal flow to a great degree in that respect.
Yeah, we are at the point that we have to develop the deal flow.
Well, for a country that created the Rubik Cube, you have a great branding asset. You should really use it.
Yeah, the branding of Rubik works everywhere. I went to school in the U.S. and it was basically one of the 2 things that people actually associate with Hungary. So, yeah, Rubik's Cube, I think it's in and of itself is a very good indication of how Hungarians typically operate. Once you understand it, it's very simple, but nobody thought of it before.
Okay, out of the cube. All right. Thanks very much. You are the resident here of a large international firm, and you haven't mentioned your successes yet, so that would be a good opportunity to do that. But I'd like to raise another issue, which is the issue of going international. For those of you who don't know, of the $2.3 billion of investment annually in Israel, I guess almost 80% of that comes from funds that are international funds, or international investors, rather than Israel-based investors. And I guess, I don't know whether you're one of them or whether you call yourself an Israeli or international fund, but I guess the topic would be, how do you work cross borders? How you compare the quality of what you see in Israel compared to other things? So give us a more international perspective.
Okay, well, I'll give it to you from Bessemer's standpoint. It's sometimes different from fund to fund. And we operate as one global fund. So when we get together on our partnership meetings every Monday, for instance, this evening, we'll be discussing at this point 3 companies tonight. It doesn't matter where they are in the world. It's the same criteria. Having said that, each partner, we give a lot of autonomy to each partner to bring the deals that fit their particular strategy. That may be based on geography or domain. And in my case, a lot of times it's geography, but not only. I would venture to say that a lot of the deals, if not most of the deals that I have invested in, and right now it's about 18 investments, my partners would not have done. Well, it's unlikely they would have found those deals, for sure, but even if they had, they probably would have passed. They would have said it's too early. They wouldn't have liked the style of the entrepreneur, which may be a little bit different from what they're used to. And that speaks to both the challenge of being a global partnership, but also the opportunity, at least with our model, because my partnership allowed me to pursue those deals that they told me outright, well, you can do them, you can do that, but I wouldn't, or we wouldn't. But, once we invest, it's a level playing field. A company puts its target out, it either meets it, or it beats it, or it misses. When we evaluate follow-on investment, we compare it to valuations or terms of other deals we're seeing. Sometimes Israeli deals look very attractive relative to our U.S. deals, but other times it's very difficult. In particular with very technology-oriented companies where it takes a long time to develop and even longer time to develop the sales. Those types of deals always look expensive. So that's been a challenge. With regards to your question about, do we feel like we're an Israeli fund or an American fund? Well, I feel like we're in Israel. I opened the office 7 years ago. We have invested, as I mentioned, over $200 million in more than 20 companies, which actually makes us one of the most active investors in Israel, both in terms of volume of deals and in terms of aggregate capital committed. Our current portfolio is about 15 or so private companies, and a lot of them are quite substantial. In fact, we're only in September, but if I'm not mistaken, our portfolio companies, about 7 of them, have raised about $170 million in follow-on rounds this year. So we're talking about substantial investments. And of course, like I'm sitting here, I often feel like I'm an ambassador for Israel. Not just because I'm resident here and pay taxes here like some of my other colleagues, but because that's what I know, that's what I live and breathe. Having said that, when I approach investors, when I approach entrepreneurs, I do bring an American angle. We have a certain style of Bessemer, which I think is more American in approach, partly based on our size. We're investing right now out of a fairly large fund of $1.6 billion. That's a lot of capital for venture, we admit it. But the way we invest is we are stage agnostic. So sometimes we like to invest early on. $3 million would be an early stage investment. More typical would be $6 to $10 million. But we are capable of investing $20, $30 million at a time, and 50, 60 million overall in a company. Now, those are numbers actually that I have not reached much in Israel. A lot of the companies we invest in here, they either don't reach that growth stage, they get acquired earlier, or they can't convince the other shareholders to raise proper growth equity. But when possible, we try and push those companies along that route. And I'm happy to say over the last 9 months, as I mentioned, we have several of our companies raising what I would consider growth financings. Companies that are growing very quickly, that ostensibly could try and optimize a $10 million round and make it work and avoid dilution. But we think we're having an impact on our companies, and they realize the advantage of raising upwards of $25, $30, $40 million when they see that when they have a plan to invest it.
And is it true what they say that Israel or Israeli VCs or people investing here tend to exit early compared to, I don't know, America or the UK?
Well, to begin with, I think the startups that are created here are somewhat precocious. They are generally ahead of the curve in many ways. And they're usually developing very advanced products. So, in the early stage, it looks like there's no market. You see a company, you're looking very far in the future, and then the market comes. Now, this company may be 3 or 4 years old at that point. It may just be starting to sell, but that's usually the point at which a large American company, most likely, will be in touch with Israeli startups, and we'll see it as a perfect add-on, exactly what they need. And the challenge we have as Israelis is that company, again, is 3 or 4 years old. It maybe have raised 2 rounds of financing, still maybe doesn't really have revenues, hasn't really yet recruited a proper management team, and certainly not in the U.S. And they're faced with a real dilemma of selling now, of taking something home, something substantial for the most part, And that's not just the entrepreneur, of course, it's also the investors. Those investors are typically Israeli funds, earlier stage, or doubling down, going out to raise a big round, saying no to the acquirer and saying, we're going to build it on our own. That's really hard. For an Israeli company that's here, not in the US, that's a really hard thing. And so, yes, more often than not, I think Israeli entrepreneurs and their investors, it's together. They opt for selling, but it's not always. It's not an easy decision. I think the more challenging or the more problematic situations are where you see a company that's growing. Let's say they're north of $5 million, even $10 million a year. They're growing 100% or so year after year. They're leading their market. Those are companies that should really say no to every acquisition attempt until it reaches what we consider crazy numbers, which you can't justify. Looking at the business today, a year from now, even 2 years from now, you can't justify those valuations. And at that point, you don't have a choice. You're almost obligated to sell. We did that in a company called IntoCell, which we'd only invested $6 million. Right off the bat, they landed a very large deal with AT&T. The company was cash flow positive right away. They really didn't use much of the investment, and the company just kept growing. Within about 2 years of our investment, we were approached by Cisco, and they wanted to buy the company. I don't remember what the first offer came in at, but we were convinced that it wasn't going to be relevant. We didn't think they would value us the way we thought we would be valued 2 years from now. We had a horizon of 2 years, because 1 year we were very confident about. 2 years gets a little bit more fuzzy. So we told them no, and not no in order to, as a tactic. We really didn't think that they would pay us a valuation that we would consider relevant. And to be honest, we didn't know what was relevant. We just weren't thinking in those terms. We were focused on growing the company. We were focused also, hopefully, investing more in the company, but that didn't come around either. But then they kept coming back. And eventually, they're the ones that came up with a really fantastic offer. It ended up being $475 million. And at that point, with really only 4 primary shareholders, or 3 primary shareholders, 2 founders, and Bessemer, we deferred to the entrepreneurs and we said, this is, by all standards, this would be a very good outcome, for both of you, certainly for us. And there's a risk in saying no. We have to really invest in the business. We may not have another acquisition attempt for the next 2 years, but there's also risk. There's also a risk that we're selling this for a half or a third of the price that it could be. We could continue this, and this could be $1 billion or $1.5 billion valuation. The company was only 2 years old. We'd only done so much, and as confident as we were, I think we made the correct decision at the time. Time will tell, but we felt and still feel like that was the correct decision, and we sold. Now that may not be what you're talking about. You may be talking about smaller companies that are sold for 60 million or 100 million, but we've done that as well. We're often the ones pushing those companies for sale. If there's one difference, I think, between U.S. investor, at least from my perspective, and some Israeli investors, is that the U.S. investors are slightly more impatient. We don't have as much patience.